How's it going out there? It's March 10th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. You know, we live in a funny world today where the rules have changed. For example, if you resist arrest, attack a police officer, try to grab that gun, and he shoots you to defend himself, that person who tried to take his gun is deemed a hero. His family will sue and get a fortune. And this is common now. Isn't it? Isolated events common, where we make martyrs out of criminals. Rules changed. We get pissed off if someone uses an improper word. So many improper words now. I think that list changes like every week by week. It's like a new dictionary. So someone mentioned the word colored to describe a black person. And that was terrible, but you're allowed to say people of color. And the person that said this, not racist, made a mistake. But you have to say things properly in the right terms now. So say people of color. Or the word transsexual is bad now. That wasn't bad, I don't think, a few years ago. It might have been, but I've seen it mentioned everywhere. Now, you know, transgender is a term that's okay. It's got to be transgender. But if you say the wrong words in public, even with zero intention of offending anyone, in today's world, you don't get a do-over. You're not allowed to make a mistake. Nothing. You're a racist, you're a bigot, you're a hater, and your career gets destroyed. Justin Thomas, great young golfer, won several majors, most popular guys, faces on the tour. A few weeks ago, he missed a short putt and said, "Oh, I'm a fag." He used the word fag. He called himself fag. And the microphone was on, and it caught him. And the media crucified this guy. He had apologized like 10 times, still apologizing, again, for calling himself a fag. Yet, 99% of gay people are not going to be offended by this word. They're not going to lose sleep. Oh my God, I cannot believe he said that. To where they now think Justin Thomas hates the entire gay community. He's terrible. But it's the media that makes a really big deal of it. And also groups, those people who accomplish nothing in their lives who are trying to gain power. But it's so amazing how careful we need to be. But Thomas had to apologize immediately, or he would have lost all of his sponsors. And those sponsors are big corporations. And these guys are the absolute worst. I notice how after Biden got elected, and congratulations, but every company's being forced. They're being forced to mention ESG, environmental, social governance, in their presentations. Every presentation that I go to, it's like 4 or 5 pages. This is what we're doing. The environment, social, equality, like it's you know, being forced, but the pages that they devote to it, how they're supporting that, every single thing, new program, amazing, right? How public they are about it, right? They never gave a shit about the environment, anything social governance before Biden. They didn't give a shit. They didn't ever mention it like they did. Now, at the same exact time, all companies, you look at any presentation of the S&P 500 companies, and they're all going to be talking about ESG in some form or another in their presentation, on their conference calls, and they're going to be addressing this going forward. Why? Well, they need to address it, or they're going to risk getting sued by these organizations. It's not like they believe in this all of a sudden at the same time. No, it has nothing to do with that. It's all corporate. It's all, hey, it's the way the world is now. But there's so much fakeness to it, right? Everything's so fake now. I don't know when that changed. It wasn't, I don't know if it's so recent, but man, it's a different world now. These people and companies aren't being genuine. They're not attacking people like Justin Thomas because they love the gay community or putting ESG in their presentation because they actually believe in it. No, they're just following orders, checking off boxes so they don't get their balls busted by these crazy organizations. I mean, canceling Dumbo now? Dumbo? Are you kidding? I mean, Dr. Seuss. Dr. Seuss is a racist now. He's a crazy racist, Dr. Seuss. But you canceling Dumbo? And what's next? Is a Roadrunner next? Wild E. Coyote, a terrorist and a murderer? Bombing everything? Trying to kill a Roadrunner? Any show? We're going to go back to every single cartoon. Tom and Jerry? Everything. We should just cancel everything. It's insane right now. And look at the women's movement. Another thing that's suddenly being mandated by companies to address. Mandated. Why now? I don't know. But now every board of directors, these Fortune 500 companies, must have a woman on it. They must have a woman on it. I want you to think about that for a minute. And I want you to think about how insulting that is for women. So you're not on a board because you busted your ass and you deserve it. No. You're only on the board because it's now mandated. To me, that's not an achievement. It's a setback. And if you're going to have equality, we need to stop labeling shit. Like calling Robert Johnson, who's the founder of BET, entrepreneur, huge successful businessman, and that he's described as the first black billionaire. How about just calling him a billionaire? Because now we're placing a label on it. When you place a label on it, aren't we trying to avoid that? Isn't it kind of weird when you think about it? Or the NBA referees, I don't know if you saw the All-Star game. It's a pretty good game. Actually, it wasn't that good a game. LeBron James' team kicked the crap out of Durant's team. But they made it a big deal. Say it's the first time graduates of historically black colleges and universities officiated in this All-Star game. Or in an All-Star game. Now, I know basketball well. I was a licensed official, referee. I'm familiar with the referees in the NBA. These are great referees. So why do we have to label it, though? I mean, seriously, we're trying to achieve equality. This isn't the way to do it. And you look at Curzio Research, we have more women than men that we employ here. Our top position, the person who runs the company, operations, is a woman. Outside of me being, the CEO and co-founder. Well, actually founder, not co-founder. 2 of our 4 partners are women. And that's not because I needed women as partners. I need to show this off to investors and the world. Oh, look at our company and the way it's structured. No, they're partners because they earned it. They were the best of their positions out of everyone I interviewed. I didn't look at color, race. I didn't look at anything. Gender. I looked at who could be the best and help this company grow to the next level, especially we have shareholders now. We want to make everybody rich. And shouldn't it be that way instead of mandating it? I'm sure I'm going to be labeled a racist, a bigot, chauvinistic pig. If this intro goes viral, I'm terrible. I'm the worst person in the world. But it's amazing how fake everyone is today. Companies, people, celebrities, politicians. Nobody does what they say they're going to do. They lie to you. They never admit when they're wrong. There's no humbleness. I mean, anywhere. You can't trust anyone. And these people, they're going to be your friend. As long as you support their agenda, they're your friend. And of course, everyone wants to be your friend when things are really, really good. When things are good, everybody wants to be your friend and wants to know you. But once that tide turns, look out. Because these same people who praise you and make sure they did it publicly suddenly become your enemy. They start talking shit behind your back as soon as the tide turns. You want proof of that? Look at Cathie Wood. Cathie Wood is the founder, CEO, and CIO, which is Chief Investment Officer, of ARK Investment Management. She's a good person, devout Christian, who named her company ARK after the Ark of the Covenant. So she got up and reading the Bible. And she actively manages 6 ETFs. And these ETFs are really, really cool because they're based on new technologies and innovation. And we know those are the names that went up tremendously since the credit crisis. And really tremendously since 15, 16, 17, 18, and going higher and higher and higher. And she says, and I'm quoting her here, disruptive innovation is often not priced correctly by traditional investment strategies because people may not understand how big the ultimate opportunities are going to be. They aren't sizing the opportunity and they aren't analyzing the disruption. So she has 6 funds. The ARK Innovation Fund has $17 billion in assets under management, makes it the largest ETF. Autonomous Tech and Robotics Fund, that is a next generation internet fund. Genomic Revolution, and then a FinTech Innovation Fund. So over $30 billion in assets under management just from these are active funds. The largest active ETF for ARK is that Innovation Fund, the largest in the world. And its top holdings, what do you think they include? Tesla, Square, Roku, Teladoc, Zillow, Shopify, Spotify, Zoom, CRISPR. to all the super duper growth names. And since inception, she's been killing it. Average annualized returns of 36%. That's 2015. That's amazing. Amazing. And she was on top of the world. Everyone praising her. Great analyst. Forward thinking. Understands innovation. Bloomberg named her the best stock picker in 2020. Kramer praised her. Everyone praised her. That was up to about February 15th. And about February 15th, all that stopped because the NASDAQ crashed over 10%. And most large cap, these super growth names, especially the ones in our portfolios, got hit by 30% plus in a couple of weeks. Yeah, Jim Cramer come on, say Kathy Wood needs to close her funds now. Needs to close it. Close it right now. I work for Cramer. Cramer was panics during big sell-offs, and that panic usually lasts about 2 weeks before it becomes bullish again. You got to close the fund. Close it right now. Right? There's a couple of days. Look now. The NASDAQ went up, 4%? I think it's up another percent. 4% yesterday. It's up today. I'm looking at my screen, almost 1%. Yeah, no one's worried anymore. It's just like last week. Close it. Even though he didn't understand that this isn't a mutual fund, you can't close it. It's an ETF, right? You don't close ETFs. Right? So you're looking at Kathy Wood all of a sudden going from a hero to so many people going out there and hating her. And she had to go on different outlets and say, look, these inflows come in and out. She has nothing to do with this. They don't have to raise money to satisfy redemptions like Melvin Capital had to do when they shorted GameStop. They needed, $2.5 billion injection. That's not this. Why is he saying to close it for? Peter Schiff called her out, didn't say too many bad things about her, said he has respect for her, but said Bitcoin, after she said Bitcoin's the best hedge against inflation. Peter Schiff's like, that's crazy, it's gold. And how gold, no matter what the facts change, the guy was born and he was like, gold. And for whatever. How old he is, 60, whatever he is. Gold, no matter what. No matter what facts change, whatever, you got to buy gold no matter what. And you miss out on everything else. But look where Bitcoin is. You saying Bitcoin's not the best hedge against inflation? Well, we have inflation right now. Most people will agree with that. We have inflation. We have higher interest rates. Interest rates surged. And Bitcoin's trading near its all-time high today. Over 55,000. Where's gold trading? Gold's been selling off during this time. Interesting. Why is he calling her out for? But I watch numerous financial media hosts, analysts, just, kind of just criticize her. And Doug Cass said on February 23rd, over the last 2 weeks, I have cautioned about the risk that ARK's virtuous cycle, perpetuated by massive inflows, runs the risk of being a vicious cycle. Should outflows commence as Kathy Wood runs her portfolio at 200 miles per hour? Come on, Doug. I mean, I've Doug on this podcast. I know him. Doug's the first person to tell you how right he is, although he's been bearish on the market since 2010. But give me a break, really? And it's funny how 1 week things change. I mean, Cass was ripping Berkshire Hathaway. I think he was able to speak at. They picked him as the speaker or the person who's going to bait Warren Buffett at his annual meeting of why he doesn't like Berkshire. And he's like, all these investments, and look what he did. And look where Berkshire's trading today. Went all the way to the roof. Just saying, if you're going to criticize, at least, have a decent performance or be right more than Kathy Wood. Because she's been wrong for 2 weeks, and it's barely 2 weeks. I mean, 2.5 weeks, and now the NASDAQ's popping back up, and she put her money where her mouth is. I mean, I came out and said, listen, I wasn't too crazy about that buy on Tesla on the way down. I just felt like it was more an ego thing. It's my opinion. I don't have respect for her. I think she's amazing, what she accomplished. But so many people turn on Kathy, and the timing was great. They didn't turn her in 2015, 16, 17, 18, through 2020, or the first 6 weeks of 2021. No way. She's a hero. She's great. Because the innovation fund soared. It was at 37 at the March bottom, March 2020, and it went to over 150 in mid-February. But when the market crashed, the NASDAQ crashed, her fund fell. At 30, 35%. And everyone turned on her. Hey, excuse my French here, but what the fuck is wrong with the world? Why do we hate so much? Why do we kick people when they're down? We love doing that, right? And usually the people doing the kicking are the ones who were doing the ass kissing when everything was going well for a certain person. But Kathy Wood, really? I mean, she's an amazing fund manager. Outside of the past few weeks, she's been dead freaking right on everything. Dead right on everything. And calls for Tesla, and they're going to have, whatever. I think it was a $3,000 price target or something she has on it, where all autonomous vehicles and stuff like that, it could be out there a little bit, but who am I to disagree? She's been right this whole entire time with this stock going higher and higher and higher for Tesla, being the largest position. So we have the NASDAQ surging over 4% on Tuesday, up today. And I'm sure everyone's going to go back to kissing her ass again as our portfolio bounces back. That's the world we live in right now. But I'm telling you, a lot of people email me about, hey, Frank, I want to be an analyst. I want to be a newsletter writer. If you want to be in this line of business, being an analyst, I can tell you what my profession, being someone that people turn to for advice on the markets, if you want to be super successful, and of course you need to have drive and be competitive and all that stuff, work hard. Yes, I know. But even more important than that, you need to establish a great network and have access to information. Not inside information, but access to information when it's happening. Before these trends develop, before you see it on CNBC, where everybody's talking about how great Tesla is at 400, 500, 600. What other people had at 40, 50, 60, like Barron. But in order to have a great network, you have to be truthful. You have to be real. You can't be fake. You have to treat people with respect, help them out. And don't help them out when things are great, right? And be their friend. Be there for them when shit is not so great for them, because that's what a true friend does. When things are really bad, that's when you're there for somebody. That's your true friends. And I know there's times all of us in our lives where we've been down, or I've been fired. And the people who reach out to me during those times, those are the people that I trust the most. Because having access to an enormous network and building that, people you trust, gives you tons of access to information. You guys see that through our newsletters, and getting into trends, traveling the world, talk to the right people. It's not because I'm a genius, it's because I talk to people who are very, very smart in specific fields. It's why we got ahead of COVID. It's not personal. It's not political COVID. Just looking at the stats, and I felt like we did a fantastic job. I'm not talking about stocks and getting out of them before, they crashed. But just telling people, hey, you know what, this doesn't impact kids. We should open schools. I mean, we've known this information, who it targets, who it impacts, who we need to protect. We've known this since April. Schools are still not open in some states. Are you kidding me? Are you kidding me? I mean, it's a disgrace. It's a disgrace. These are our kids. Why is politics involved? But having that great network, I'm going to find those great ideas ahead of mainstream media. That's how you become successful. The only way to achieve this is having that great network, being real, not fake. Not someone that's going to kiss ass. Someone that talks behind other people's backs. You don't want to ever do that. That's the easiest way to separate yourself from so many people right now. And I just went through a whole bunch of different things. I'm talking about, the gender. I'm talking about gay community. Black, racist, and filtering down to corporations and businesses. I mean, separate yourself from this garbage. People who just hate everything. They hate America. They hate successful people. They hate people who work hard. Don't be like that. Especially if you want to be great at this profession, at my profession. Don't be fake. Just don't be fake. Now, my next guest is part of my network. He's a good friend, someone I trust, someone who's an investor in Curzio Research, through CEO token, bought into our offering, so he's a shareholder. Someone who probably made you a ton of money if you listen to him, and that's Ed Karr. So Ed's a successful entrepreneur. He's been on this podcast numerous times, even back in 2017, telling you to buy Bitcoin when it was under $3,000. It's over $55,000 as I speak. This is going to get published in a few hours. It could be $45,000 then. Doesn't matter. At $3,000, he made a fortune. And he came on in 2018, 19 to the same thing. Buy Bitcoin, blockchain's for real. But Ed is now the executive chairman of a promising small cap gold company. Started many businesses, successful businesses. And there's a company I'm personally invested in. And after this interview, you're going to know why I have a big position in the stock. You'll know why. You'll know why right away. So I suggest listening up. As one of the smartest guys I know, always straight up, always full of great ideas. So let's get to my interview with Ed Karr right now. Ed Karr, thanks so much for coming back on Wall Street Unplugged.
Frank, great to be here. Thanks so much for having me again.
Well, I want to start out with Bitcoin because I've had you on since 2017. You're an investor in our CEO token. You're very familiar with this industry. And just to bring everyone here for Ed, to June 2017 when I interviewed him, he said, and this is when Bitcoin was at 3,000. He said, demand's now stronger than ever. Recent volumes are proving to be a massive hedge against potential macroeconomic events. And then in early 2019, when I interviewed you, said, one thing I can guarantee to you and your subscribers, Frank, is that blockchain technology that's here to stay. And it's going to revolutionize our lives probably the way that the internet did originally in the 90s. We're looking at Bitcoin getting close to all-time highs again for over 55,000. What are your thoughts now? I mean, what an amazing call. But, I mean, is this just hysteria? You think it's going a lot higher? We're seeing more institutional adoption. I want to get your thoughts as someone who's been covering this industry for a very, very long time.
Yeah. Thanks, Frank. And certainly a lot of interest in Bitcoin these days. Man, when I put on CNBC, they've now got the Bitcoin ticker and like the GameStop ticker, running in full time live stream. So it just shows all the interest in it. And certainly we've had this incredible move. You look at Bitcoin today at 56,000, I think 200 this morning. Incredible from the last time we spoke. I'll tell you, my general thought process is this move has been spectacular, but also justified. And I think what we're really seeing is the institutionalization of blockchain, cryptocurrencies, and especially Bitcoin. So as we see more institutions, more banks, more Fortune 500 companies start to get involved, Wall Street, et cetera. And don't forget, back when we had originally talked, Frank, 2017 or so, people were thinking, oh, Bitcoin is just the Silk Road, money launderers, criminals, like sort of
tulip mania.
Yeah, tulip mania, exactly. And then we've gone from 3,000 to 56,000. So it's been an incredible run. But I do believe this is validation of the big institutions coming in now.
So what do you think now? Because it seemed there's an interesting stat out there that I saw. I think it was yesterday on one of the. I think it might have been Cointelegraph. I forgot what site it was, saying that there's more accounts that have that spent over $100,000 on Bitcoin in the past few weeks, and this is when prices. I wouldn't say crash right in this because a crash isn't really like a 15, 20% move in Bitcoin, which happens in weeks. But when it went down to, below 40, 47, 45, a lot of people started adding. And it wasn't, those individual investors, right? Where these are young kids that understand Bitcoin, it's digital, and this is the wave of the future. This was institutional buying. And like you said, you're seeing it. Does that mean that it seems like with the adoption and every time this thing goes down, people are buying and more companies are using their cash balances to do it. Do you see this going significantly higher from here, or will you be more inclined to take profits? I mean, the crazy bulls are just like, buy, it's going to 100. If it goes to 100, they're going to say it's going to go to 300,000. But I'm just curious, like, so from someone that's in it early like you, would you be just taking some profits here, or you think it's going to go a lot higher?
Look, I tell you, as you know, Frank, I've been doing this for a while. So my kind of spidey sense, my trader in me, says the short-term big money has been made. We get something that goes from 3,000 to 56,000. That's a big move. And a lot of people bought in Bitcoin, 5 to 10,000. Let's say you even bought it at 10,000. It's at 56, so you made 5x your money. Is Bitcoin now going to go to 250,000? I mean, it certainly could. It certainly could. But I don't think the march from 56,000 here to 250,000 is going to be a straight up hockey stick. I really don't. I think it's going to take time. And we see it, whether it's a stock, a commodity, a cryptocurrency, they tend to have these big, massive rallies and spikes, and then they cool off. There might be institutions that come in and short this market via the futures. I think we need to consolidate for a while. And there are some significant risks, Frank, to the whole Bitcoin infrastructure out there. And I think the biggest risk that everyone has to be aware of is government. If the U.S. government comes out, especially under the Biden administration, they just decide tomorrow to classify Bitcoin as a security, I mean, it could lose 50% overnight. You'd have to have FINRA-regulated broker-dealers clearing the trades, and that's a major risk. That really is. And ultimately, at the end of the day, the government, the Federal Reserve, the regulators, I don't think they're going to let this thing just, stay out there. Once you start approaching trillion-dollar market caps and become a little competition to the global financial system, that's when the government tends to step in and give you a little, slap on the cheek.
Yeah, that definitely makes sense. It's going to be interesting to see how this is, regulated going forward. And that leads us to the Coinbase IPO, I think is going to be a game changer, right? Because it forced them to really, I think it was 2018 or 17, where I think it was 10-20% of their accounts. Don't quote me on that. But they didn't have, they just, whatever. They didn't have all the proper checks. They were probably most of them were okay. But they basically got rid of them and said have to go through the AML KFC process because they knew they were going to go public. Now we're looking at something that could go 80 billion, 100 billion valuation, which is insane because that would make it a bigger market cap than every major exchange in the U.S. Their market caps combined, which is insane. But what's the next step here? Because you mentioned the word security. You know about security tokens. You invested in our token. You're seeing NFTs, right? Non-fungible tokens. I mean, what's the next stage of this? Because I think. You were talking Bitcoin when nobody's talking Bitcoin. The whole world's talking Bitcoin. Like you said, you're up, 20x on it or whatever. What's the next step here and what are you looking at in how this develops? Or is it just, hey, Ethereum and 2.0? Is that something? I mean, what's your view on other things outside of Bitcoin? Because that just like the internet, I mean, social media didn't come to a good 10, 12 years after, right? Really? I mean, and then it blew. You just see these different industries get developed and created. And again, we had more high-speed internet, but I think you know where I'm going with this. What's the next step, you think, in this Bitcoin revolution?
Look, I've always been extremely impressed, enthusiastic with blockchain and the technology behind the blockchain. The architecture of that is going to change the world, in my opinion, more than the .com and the internet, revolution. Mm-hmm. And so probably just like the .com shakeout we had in the late 90s, there'll be a couple companies left standing. So you'll probably have Bitcoin, Ethereum, but there are thousands of alt cryptocurrencies that are going in the dustbin, and they will all be zeros. So you'll have a couple left, but blockchain is definitely here to stay. And the revolutionary implications when you look at this to change society, things we can put on the blockchain from regular banking. I mean, I live, Frank, in Europe, and if I wanted to send you money on a Sunday night at 3:00 in the morning, and it's my money, private transaction to you, why shouldn't I be able to do that? The world is currently right now hostage to the global banking SWIFT system. So it's only 9 to 5, and these international money center banks, they do a wire transfer, they sit on the float, they take interest off you, me, and the little guys for 3-4 days, and they make billions and trillions of dollars. I think blockchain will change all that. I think blockchain will trade the commodity trading industry that is very, very paper heavy and archaic and deals with, bills of lading. And when you look at supplies of physical commodities, rice, copper, gold, whatever, blockchain will change all that. I think blockchain will change the identification industry, driver's license, passports, medical records. It's all going on the blockchain. It's going to be incredible. And they will tokenize and securitize everything in the next decades.
Yeah, it's amazing. It's amazing where it was just 2-3 years ago, and even for people who went in 5 years ago, and just seeing, the crash in 2018, for this to come back and getting it right. I think the crypto world and Wall Street are getting it. They're starting to get together in order. I think that needs to happen in order for this thing. And obviously, that's really what's driving this, right? Institutions, but you need a little bit of regulation, like with Coinbase. You need to know that your account is safe. I understand, decentralized, DApps, everything, but you need to make sure that everything is safe. And I think now that Coinbase is coming out with that, and people, it's very easy to buy Bitcoin today than it ever was. It just adds to that, to the possibility that this thing is really, really going to scale much more than it already has. I guess the last question on this would be, is there anything that you're invested in terms of tokens, outside of it's Bitcoin or, again, I know you have our CEO token, but is there anything else that interests you, or it's kind of, hey, I'm a Bitcoin guy?
No, absolutely. And I look at a lot of different projects and securities and tokens, and it's very, very interesting. And I'm constantly on the lookout for different opportunities and still very enthusiastic of this whole sector. And I think, Frank, your listeners, all of us, we have to look like, why are cryptocurrencies running so much? Well, it's a macro discussion. Why are SPACs so popular right now, and why is so much cash flowing into SPACs? Well, I tell you what, the Biden administration and Congress just passed a $1.9 trillion stimulus. And that money has not even flowed into the U.S. economy yet. Probably next week or the week after, people will start getting their stimulus checks. And then this amount of money is unprecedented. The amount of money that Congress, the Federal Reserve is spending to combat, this COVID global pandemic, it's unprecedented. So we are awash globally in this tsunami of liquidity, and it is going into speculative assets. So real estate's going up, the stock market's going up. You'll get stocks like GameStop and, Tesla that just go crazy. You have Bitcoin that goes crazy because ultimately, in my humble opinion, Frank, these are all inflationary forces. The global money supply is increasing. We're seeing even, lumber going up, some of the agricultural commodities going up. We're seeing copper, on a hell of a bull run. Everything is in a bull market, and it's all due to liquidity. So it's an unprecedented time in human history.
Now, here's the $64,000 question. So inflation creeping higher the past few months, right? We're all aware interest rates they've gone higher. And the interesting thing for me is we're seeing Bitcoin near all-time highs. So maybe you could say it's a hedge against inflation. But you have gold selling off here. Talk about gold. I mean, is it this Bitcoin really taking the place of gold? Maybe if it's a store of value. And again, if you talk to, the gold bugs are going to say, that's not a store of value, But still, there are people that, and especially the younger generation, when it comes to, hey, you know what? I want to own something outside of, those assets that you just mentioned, whatever, even if it's collectibles or stocks or real estate, And if they have a choice between gold and Bitcoin, the younger generation is definitely picking Bitcoin right now. Is that taking the luster away from gold, or is this creating a great opportunity for gold?
Well, I personally, I've always thought that they are mutually compatible, and investors and speculators should own both. For me, gold is my insurance policy. So I want to have gold. I want to have physical. I also own, the GLD and a lot of exposure to gold. Bitcoin for me is much more of a speculative, fun trading vehicle. Who knows if it's going to be around in 10 or 20 years? We really don't know. Not only is government a big risk to Bitcoin, look at quantum computing coming in the future and these evolutions in computing power. If China cracks the quantum computing before the United States, I mean, with quantum computer, you could literally hack a blockchain in like a nanosecond. So they could go in and steal everyone's Bitcoin, and everyone who thinks it's secure, good luck. Or maybe Google gets the first quantum computer. I don't know. But that's going to be a game changer as well. So your quantum computer is not going to hack my gold coins. I guarantee you that, And you're absolutely right, Frank. Gold has been languishing, and we have to look and think why. And, they're very, very different groups. The millennials love to speculate with their smartphones and their Robinhood accounts and get in there and buy some cryptos and put $10, $20. Wow. And look at my gain. Wonderful. Who are the big buyers of gold? Central banks around the world. They are the big buyers. They're not out buying Bitcoin. They're buying the 12.5 kilo central bank bars. And, there's countries like China, like Russia, Middle East that are just hoovering up the gold supply at these lower levels. And gold tends to make a seasonal low around now, actually, Frank. It tends to sell off February to early March, then kind of base. You got the big Canadian mining conference going on right now, the PBAC. And, usually coming out of that, gold tends to go on a nice little run into the summer. So I think gold is an incredible buy right here, especially due to the fact, you saw some of these Reddit traders kind of want to get behind silver and, light that up a little bit. And silver had a nice little pop. Nothing's happened yet with gold. So gold's an incredible buy right here when you look at it value-wise to compare to everything else. I mean, at $1,715 an ounce, where we are today, I tell you myself, I'm going to take a couple of my Bitcoin profits and I'm going to start just deploying those into gold because I think the relative value of gold is much higher. And remember, Frank, on the podcast back in whatever it was, 2017, I said, and I still believe that at some point, gold has the potential to trade like Bitcoin. I think we can get a massive speculative blow off in gold. And what will really precipitate that will be the fear factor. If people believe that ultimately, with all of this quantitative easing and money printing from the Fed, from Congress, if ultimately people start to lose faith in the US dollar, and especially international investors, and they start dumping the dollar and the dollar declines, it could set off a cataclysmic global reaction like Zimbabwe, like Venezuela, leading to a currency meltdown. That's when you would just see money pour into gold because people would be scared. They would want to maintain their purchasing power parity. And we could see $3,000, $5,000, $10,000 gold very, very quickly.
No, that's interesting. And we talked a lot about Bitcoin, and it's a good segue into gold here. But with Bitcoin and cryptos, that's kind of like a side thing for you. For U.S. gold, let's talk about U.S. gold. So this is a company that you've been a part of for a very, very long time. You acquired the Copper King asset a while ago. Why don't you bring us in of the Copper King asset, U.S. gold? What makes this asset so special? Because this is something that I'm invested in personally, and I'm invested long term because I saw this project personally. But why don't you talk a little bit about that and bring everybody in here on U.S. gold?
Yeah, I'd be happy to, Frank, and thanks for that. And when you look at the company, U.S. Gold Corp, certainly the project is important, Copper King, but probably the most important thing, in my opinion, for companies is you got to look at the people. Because projects are great, but if you don't have the people and the management to move those projects forward or that technology forward, you're not getting anywhere. And that's why companies like, Tesla get a premium valuation because of Elon Musk. So when you look at U.S. Gold Corp, last August, we appointed George B. as our president CEO. And George, you've met him, Frank, an incredible guy. And what we've got in George B. that I think is still underappreciated, we have the Tom Brady of mining. Tom Brady's a winner. You're down in Florida. He goes down to Tampa Bay there and bang, ends up winning the Super Bowl.
Yep.
And that's like George B. George B. is a winner. This is a guy who has been in the mining industry for 40 years. He spent 16 years with Barrick Gold as a senior executive, brought some of the biggest projects, biggest mines on this planet into production. He was the mine manager for Gold Strike in Nevada. That's the mine that made Barrick. And so George was living the good life in Park City, Utah, sitting there in semi-retirement, enjoying the powder skiing. And when we actually introduced him to our CK Gold project in Wyoming as a consultant, he fell in love with it, Frank. And he said, wow, guys, this is a project whose time has come. I know with my experience and my background and skill set, I can push this thing forward. And this is a big moneymaker for these shareholders. And that's when George came all in. And, this is basically going to be his swan song. He's in his early 60s. He knows that he can push this project forward into production, and we are extremely excited with the progress we've made so far.
Yeah, and I've met George personally, and I said this to you afterwards, where he was the one person or the one geologist / engineer that I met, and I've been on tons of projects, over the past 15 years, where he didn't say how great the project, like, this is a great project. He was like, this is what we need to do to develop. We're going to do this, and this. And remember, early stage, a lot of people with junior miners, they don't look to develop. They just, which I think puts you guys in an incredible position because a lot of them are just, hey, let's just, stick a couple things in the ground, see what the asset's all about. And then, the goal is to sell to somebody else. With this, he's like, I'm developing this. And that's not saying that you can't get a takeover or, get acquired at a higher price. And he's going to do its best interest of shareholders for you guys. But I love the fact that that's the goal here is we're developing this thing. Now, George could have worked any place and he could have stayed retired forever. So that was one of the things that really attracted to me. This is why I went out there to go see this project in Wyoming. Talk a little bit more about the recent news, because you just came out with news, and that's why I wanted to have you on today a couple of days ago, which is fantastic and something that, I felt like, just by seeing the project myself and seeing, the gold right on top of the surface and the copper. But the news that came out, talk about the news that came out, and I believe it was just a couple days ago.
Yeah, so this is game changing. And we are moving the Copper King project right now. As you know, Frank, we have a preliminary economic assessment, was done in the past by Mine Development Associates. We're moving the project right now to what's called a pre-feasibility study. So we're doing a bunch of drilling, a bunch of geological work, reports, et cetera, to move this project forward. And on Monday, 2 days ago, March 8th, we put out a press release on metallurgy. And metallurgy is huge. This is game changing for us. And I don't want to get too technical, but basically what the press release showed is that the top of this deposit of Copper King has a oxide zone that comes up to surface. That oxide zone has some of the highest grades in the deposit. We put out some press releases back in December talking about those high grade intercepts. I mean, these are snazzy intercepts. And so the metallurgy that was done in the past, the group that did it, SGS out of Canada, they had pretty poor recoveries out of that top oxidized zone recoveries for copper and gold. In fact, on the copper, they were only getting about a 10% recovery. So our recent work, not only do we have George B. as our president and CEO, Frank, we have all of George's experience, Rolodex, and relationships of people and consultants he has worked with for 30 or 40 years. So one of our head metallurgists, John Wells, has been working with Kappas Cassidy out of Reno, and KCA did the recent metallurgical testing. And we have now optimized the recoveries, and we've got the recovery of copper in that top oxidized zone up to 60%. So from 10% to 60%, Frank, that's a 500% increase in the recoveries. You know, it's huge. It's absolutely huge. And those economics are going to flow right to the bottom line. Important to point out, too, this is some of the very first material. It is the first material that will go to the mill. So this deposit, you were out there, Frank. You stood right on top of that. You saw those copper rocks, you know, filled with copper and gold. It comes right up to surface. So when we put this into production in the future, that material, like literally the first shovels in the ground, when that material goes to the mill, we will be producing revenues and cash flow from day one. So this project becomes highly profitable. A lot of deposits, they might be 100 or 200 feet underground. So you have to do what's called pre-stripping. You have to take all that overburden off before you get to the actual mineralized material. At Copper King, we are at mineralized material right away. We're in the highest grade, you know, payday material right away. So it means our payback is going to be very, very quick. And we've now increased the recoveries in copper by 500% and gold increased by 27%. So these are going to be super exciting. I think the economics on the PFS are going to be very, very robust. And as we release that, we believe we're still on track for about mid-June this year to have this PFS document come out. This is the catalyst, Frank. This is what the institutions, the real big boys, will start looking at. And I think right after this PFS comes out, our stock, our company will re-rate. You know, you look at our competition, they are trading at significant multiples higher than us with similar assets. So we've got a real opportunity here to create a lot of shareholder value.
And guys, just to bring you in here too, that the pre-feasibility study too, it's, you know, I've had companies come to me and they tell you, you know, based on their own estimates, and they might get an independent study just showing, you know, this has 2 million ounces and these are the grades. For institutions, they need to see the economic study. They really need to see that. And once that, because it's a stamp approval, it's done independent, and that put the economics on the project, where now you could have analysts cover it and it gets throughout the industry like, holy cow, you just see these results. And that's, you said that's coming out. And I have your presentation up now just to show that this is from 2012, guys, valuing the project at 178. Again, you just came out with news showing that it's a much better project, higher gold grades, even more copper, but it's pricing gold at $1,275, right? And gold is $1,750 today. You're looking at copper price $280. They're around $4, almost 50% higher, a little bit more than that. So, and yet this is $180 million. And then you have on the next page where you guys, if you said, hey, we just use, a little bit lower, you still have 280 copper here, but you have it at 321 million. This is before these results. And your market cap is at 70 million. That's something that attracted me where, here's a catalyst that's coming up. It's going to probably be pretty good based on the news you already reported. They're underestimating the potential here. But I guess that the biggest question is, you're sitting on a great asset. It's in a mine-friendly district. You have the right people involved. Everything's perfect. What about, the gold industry itself. I mean, because we know it doesn't even matter. I always used to think the most important thing for any gold company is people. But yet I know a ton of projects with great people on it. And we had like a 5-year stretch where nothing in gold worked and everything crashed. Didn't matter who you were. So do you need gold prices to go higher here? Because if they stay the same, this seems like this is a layup where this thing's going to skyrocket higher once you come out with that study. Or, are people going to say, I don't know, I just want to stay away from gold altogether and come down, and, this thing could come down as gold prices come down. But how dependent is this on gold prices? I mean, you have it where, you can produce this at very, very cheap gold prices and copper prices. But how important is that? Because I think that's the biggest risk. I mean, you have the project, you have the company. I feel like nobody really knows about this. But if the gold industry stays the way it is, or we see it push down to $1,600 an ounce, I don't think it's going to matter for any gold company, right? Everything's probably just going to sell off.
Yeah, I think that's a good point and observation, Frank. And certainly a increasing bullion price, increasing copper price will help us in the entire industry longer term. And I am very bullish. Mm-hmm. But I'll tell you, the gold fund managers and the sophisticated specialists in this sector are a very small percentage of the overall investment universe. So most people are generalists. And when you look at money managers or hedge fund managers, institutions, big guys like CalPERS, even retail, very few people actually specialize in gold and exploration and mining stocks. So as long as, the market is ripping, then your growth stocks are hitting new highs, your blue chips are doing exceedingly well, you'll probably just have a small portion of overall investment capital allocated towards this sector. I think if the market were to sell off a little, we'd see tremendous inflows in here. And at some point we will. We're already starting to see now this rotation in the market. With interest rates increasing, people are starting to rotate. They look at these hyper growth stocks as very long duration that can get hit in a rising interest rate environment. And you look out there today, Frank, and people look, where's the relative value? Do I go out and do I buy stocks that are very, very extended, whether it's a Zoom or a Netflix or a Tesla, or do I look at relative value maybe from the mining sector? And I look at a company specifically like US Gold Corp with a $70 million market cap, no debt, $15 million in cash on the balance sheet, so a $55 million enterprise value. We've got an asset in Wyoming with a potential $321 million NPV or higher, and 2 projects in Nevada and a project in Idaho that alone could all be company makers. So I think that, the interest in this sector will come. And there's a lot of companies in the mining world that are highly profitable at $1,700 gold. And I'll tell you, as I talked about, Frank, with this liquidity tsunami, I just do not believe gold is going to stay here at 1,700. I think we're going to end this year with a 2-handle price on gold. We'll be above $2,000 by the end of the year.
Yeah, no, and it's tough. It's a tough question, right? Because eventually when I look at gold, I'm bullish on gold. I have a lot of money invested in gold in my portfolio. But, in the Bitcoin craze, people think it's either or. You're one of the guys, just like me, just like a Frank Holmes, who I had on a couple of weeks ago. You could buy both, and they make sense for the current environment where, everyone's spending money like crazy. But, I have a chart of your stock up here. I mean, it's pulled back along with most gold stocks, but after the news right here, you see it, it went higher. But everything's in place here. I love the excitement for you guys. I love the fact George B is there. You guys got a great management team. And you've been a friend for a long time. Again, it means a lot that you invested in a company. And love having you on because we can go anywhere, right? When Bitcoin, gold, you get everything, right, with you. So I just want to say thank you so much for coming on. Really, really great stuff. And you're always welcome, man.
Frank, I really appreciate that. And just from the bottom of my heart and everyone at the company, we really appreciate your support. All of your kind comments and just, the support you've been there. You've really believed in us and the entire team, and that means a lot to us too. We want to make this work for everyone out there, for you personally, all your listeners. Management and insiders of this company, as you know, are significant shareholders. We're not just paycheck collectors. Got a lot of our own money in this deal, and we want to make it work.
No, that's great. That's great. So, Ed, as always, again, always an open invitation for you, and hopefully you join us again soon.
Appreciate it, Frank. All the best.
All right, buddy. All right, guys, great stuff from Ed. He's extremely smart, someone I know for a long time, been on numerous trips with him. someone who's never BS'd me, which is a rarity in the resource space. If my resource contacts out there who are very good, they'll agree with that in a heartbeat. But I really love that Copper King project. I saw it myself. I think it's being significantly undervalued. When that new PFS comes out, it's going to show that this project is worth well north of $300 million, maybe $400 million, and it has a market cap of $70 million. With that said, I did bring up that risk to him because if gold is really going to be out of favor going forward, you know what, this stock's not going to do that well. But if we stay here at 1,700, go high 1,800, we push 2,000, you think gold's going higher, this thing is going to skyrocket for here. It presents a really great opportunity. So I'm glad having him on. I love that he shares ideas. Again, he's a really good friend. And I love that interview. But this podcast is about you, not about me. So know what you thought at Frank@CurzioResearch.com. That's FrankCurzioResearch.com. Now I'm bringing in my buddy, one and only Daniel Creech, senior analyst, Curzio Research. How's it going, man?
What's up, Frank? Hey, things are good. Another Wednesday. Happy Wednesday to everybody. Lots going on. Markets are crazy.
There's so much going on, and it was nice that we got to sneak out on the golf course yesterday, though, right?
It was perfect. We didn't, the weather was great, and yeah, it was nice. Other than our golf games, it was perfect.
Yeah, I mean, we got out late afternoon, but yeah, we try to practice a little bit more. So we'll see what happens there. But Dave's an awesome golfer, seriously. I mean, actually, you weren't too awesome yesterday, but you're normally awesome.
I'm pretty sure I took a 13 if I counted all the legitimate strokes on one hole.
That was one hole. Let's talk about the
other golfers know this. When you're working on something and you're trying to figure out a club and it's not working, and you get that Happy Gilmore or that John Daly F it mindset, that's a good one. So
that's great. That's great.
Buy cheap golf balls.
No, and it's good. I had to get out late in the afternoon sometimes for a couple hours and come back to the office and then work into really late. But just to, I always do that. I don't know if you do that, but I always, I know you do because you're in the office, but I don't know if everybody does it. But I worked on Wall Street for a very, very long time. And I used to leave at 5:30 a.m., take the train, get there by actually 5 a.m., get there by 6 a.m. I used to read the whole Wall Street Journal on the train before I got to the office, worked on Wall Street with Kramer. You're there till, I had a podcast where I did this podcast every day. I didn't do it every week. I was doing it every day. And we had lots of guests there, lots of writers. So it was easy to get guests and book guests. And the time I finished was like 6, and I'd get home at 7 p.m. And I mean, it was incredible. I mean, I knew everything about everything in the markets because I was just so engulfed. But, I didn't have kids at the time. But I have to tell you, the way I work now, I'm probably putting in more hours to work with your own business. But being able to step away and go pick my daughters up or jump in the pool with them in the afternoon and come back, I'm telling you, that is the most, just work out in the middle of the day and come back. And I mean, guys, that's the most refreshing thing ever. And I'm sure a lot of people are experiencing that now, with COVID and people staying home, working from home. But man, what a difference just to refresh your mind. It's like, just pushing that refresh button. But yeah, I know you like to do that too.
Oh, absolutely. And this is one thing that I'm going to pat myself on the back totally here, because I actually stop and take the time to appreciate this, because not everybody gets the option to do that. And, if you're one of those real optimistic son of a guns that thinks you can get something good from everything, that is one thing that COVID will bring forward. Let's just say everything is cured, coronavirus is done. You're still not going to have the typical back to work 5 days a week, 9 to 5. You're already seeing huge corporations all over the country. I think Deutsche Bank announced that they're going to do permanently options to work at least a couple days from home.
Yeah.
And that is a good thing, because when you have the ability to make your deadlines, set your schedule, I mean, if you go hit a bucket of golf balls at lunchtime, it feels like you're going for 2.5 hours. You're going for 40 minutes. So it's a refresh. People, you got to get away, recharge your batteries. So yeah, take advantage of that. But I'm very grateful, and hopefully everybody that doesn't get to take advantage of that is doing something to get them in the position they can going forward.
You just need to free your mind a little bit. So let's get to the markets here. A lot has happened over the past few days. Even the past week, where we saw the NASDAQ crash, and I had an opening about Cathie Wood. Everybody thinks everybody loved her from 2015 up to about 2.5 weeks ago. And now they criticize. But it's funny because we see this in the market time and time again since 2010, where we see the pullbacks are quick, they're rapid, and it's like, holy cow, man, I can't believe this thing's down 25-30%. I mean, it's not like 2000 where the dot-com era, that bubble bursted, and it was like 2-3 years, like just an 80%, 75% decline in NASDAQ over like a 2-year, 2.5-year period. It's not fun. This is like, it happened so fast, things get wrecked. The NASDAQ fell, the index, right? The NASDAQ fell more than 10%, but then it bounces back 4%. The Solar 10 ETF was down 6%, I believe, on Monday, and then up 7% on Tuesday. How does that make any sense at all? Suddenly, all these people like, these are overvalued. We got to get out of them. And the next day, we got to get back in them. The rotation is amazing. And now that we have the stimulus passed, right? I mean, it seems like, these catalysts, low interest rates. Yes, we're seeing long rates go higher, but it just seems like more catalysts where people are more optimistic. But it's funny how a couple of days makes where, I was watching a lot of the media and it just, going crazy, stocks are crashing. Now everybody seems like, oh, everything's okay again.
Yeah. That's a great point. You hit the nail right on the head, because what we need to, as investors and just individuals, is we have to train ourselves or condition ourselves to get in that mindset, because things are going to be pulled forward faster and more volatile going forward because of the actions by governments and central banks. And this is a tight, spring being coiled for years and years and years. And I think that's a great point. The reason those recessions and pullbacks don't last as long now is because there's so much more money. There's so much more liquidity. There's so much more hands in the pot going around. And I think that that's going to be expected. I didn't even realize, because I don't look at Tesla every day like everybody else in the financial media. But you pointed out, hell, it was down 36% from its highs up until yesterday when it went up 15% in a day. Those moves, like you said, it's amazing. I mean, it's hilarious. But so keep in mind proper position sizing. And this all really started, Frank, on March 1st. That was when the big rally came, the 600 point in the Dow. That was when I was traveling back. And do you know why and what kicked off this massive market rally?
Tell me.
The Democrats threw the poor people under the bus again.
I knew that was coming.
Because what happened before the stimulus just got passed, or is in the process of being passed, the Senate passed it, kicked it back to the House. I think they're doing it literally right now. But on that Monday, the 1st, is when the Senate rejected the $15 minimum wage. And what happened? Markets rallied. Because, of course, markets are only for the rich people, which is why everybody needs to get in the market so you can be rich. Duh. But businesses saw that a huge cost from the government, and even penalties, if the minimum wage wasn't allowed in, Bernie Sanders and some others were going to try to pass a bill to penalize companies that didn't pay up to $15 an hour. When you remove that massive risk off the table, that allows businesses to look forward a little bit more and keep the wolf away from the door for a little bit longer. So that's when this rally initially started. Interest rates, we can go there if you want to, but I had to point that out now that the stimulus has passed.
What's interesting about the political, and I hate politics, both sides, because usually when I talk about, Democrats, people are like, oh, you're super conservative and this. And no, I call it how it is. I like real people, and on both sides, they're not real. I mean, a good example of this is how, the Georgia runoff, right? And that was control of the Senate. And all of a sudden, they took polls and said, okay, these people want that minimum wage higher, 15. And that was a big deal. And Democrats really pushed that. Then all of a sudden, the Republicans are like, oh, wow, these polls might be right. And then they're like, all right, we got to push. No, we believe in that too. The 50, we believe. All of this is complete bullshit. All of it's bullshit, right? So they get the election. Now they come down to it, and they're not going to raise the minimum wage, whether you agree with it or not. It's just amazing how they use that as a tool to get elected on both sides. It didn't work out because the Republicans were late to the party because they didn't look at the right polls. And congratulations to Democrats. But now, congratulations. But you know what? Do what you freaking say what you're going to do once, just once. You know what I mean?
No. That's not the game, Frank.
I mean, even if, again, it's going to hurt a lot of businesses if you raise that minimum wage. I get it. I'm just saying, but just, not that I agree with that specific policy, but I do like people who just whatever you say you're going to do, just do it. We're in a world where everything's tracked media. We see who's bullshitting. We see it. And it's just amazing. Like, they don't even care, right? It's just, I don't know. But let's get to interest rates. Interest rates are moving higher. People worry about inflation, right, Daniel? So, and I explained this, and I did, my newsletter, which is going out later today to Curzio Research Advisory members. These are two risks a lot of people worry about. And I'm going to tell you, the market doesn't crash if you could see those risks. We all see interest rates going higher. You have yield curve control that's going to come if it goes higher. It's not just me saying it. You've seen it, where they kept those long-term rates. Jeffrey Gundlach, it's unbelievably brilliant, one of the greatest bond guys. A lot of the bond guys, big name bond guys, are saying the same thing, that yes, that could definitely happen. It hasn't happened since World War II to fund that debt, or just to cap it. And now we have inflation going higher, which we all see. Now, we didn't see in 2008 the housing crisis. A few people saw it. And even the people who saw it didn't understand the full extent that everything was like on AIG and they were insured. And she's like, sure, this is easy money. They didn't even know, right? The whole system was going to collapse. They didn't know how crazy it was. Nobody knew to that extent, because it wasn't just like people think subprime was the reason the market. It wasn't subprime. It was a small part of the market. It was the leveraging, the huge amount of leveraging of these subprime assets, which means housing prices only had to go down a little bit for the whole entire market to crash, and then it was just a ripple effect all the way through. Then we see the pandemic, something that, again, nobody really predicted how crazy it would be and spread U.S. and how many deaths and things like that. And the market fell sharply. That's when you see markets crash, but you see interest rates ahead of you. You see inflation ahead of you. These are things we see, guys. It's not these risks that are going to bring down the market. What brought it down over the past couple of weeks was the massive surge immediately. We never see a move like that, 1%, 1.5, and it's just crazy in a 10-year. But I would think that there's got to be other risks. If you really think this market's going to sell off with low interest rates, the new stimulus bill just passed, or basically passed. It's hard to suggest that there's money that's going to come out of they can come out of technology stocks.
Yep.
And they're going to be rotated, but they're being rotated into cyclical names and travel related names, which we've been well ahead of that trend. But I'm not seeing money. And even when you look at the inflows, outflows, and things that companies that we follow, like the Bank of America, that track trillions in assets, you're not seeing those outflows. You're just seeing it from different sectors, but not completely like out of the market. But there's got to be other risks that really crash this market. It's not going to be higher interest rates or inflation, because we actually see that. We can see it coming.
Yeah, and it's talked about all the time. I agree with you on that. I would take this opportunity to look to the TLT is the symbol. It's the iShares 20 plus Treasury bond ETF. It invests in longer term treasuries, 20 years or more, just like the name implies. It's down about 20% because interest rates have spiked quickly. And if you notice, a lot of people aren't really talking about the yield, 1.5, which is the same as the S&P 500 dividend rate, give or take. They're talking about why and how quickly it rose. So if you keep things very simple, Frank, the government, the interesting thing to watch will be the reaction, because money is emotional. So the government literally is in a position where it cannot allow interest rates to go very high. Why? Because we're running such massive deficits, you would have to borrow billions and billions and billions on top of additional money just to pay the interest as interest rates move up. If you think that's going to happen willingly, then you're not paying attention. But when they come out and they announce yield curve control, or they announce Operation QE or twisting or whatever the hell they're going to call it this next time, the reaction will be what you have to pay attention to. Short term, it'll be hard to believe that things don't get back to normal as a status quo. Rates will stabilize or go down, just like who's the Tepper? That was a great interview with Tepper, or I guess it wasn't an interview, but they were given bullet points with CNBC. But this is a situation where yields have spiked. It's got everybody's attention. It made everybody nervous. Now do the difficult thing and look to gain exposure on that and profit off of things getting back to the Willy Wonka.
Yeah, it is pretty crazy. And I'm not saying to go buy ESG companies that have gone up tremendously with no earnings power at all. Space companies as well. You're going to see a lot of these things. They've come down a little bit, but there's just so many good names. Like even in technology, if you're looking at the Avagos, you're looking at Facebook, at the valuations of these things and how fast they're growing. There's a lot of names that just got thrown out with everybody else. Yep. And they're not all the same. They're really not. So you're going to see that separation. You always see that everything comes down, but that's the best opportunity, right? You want to buy things that are cheaper. Now you can go and say, wow, Avago's getting this thing done. NVIDIA, the chip shortage, supply chain stuff, it didn't impact them at all. Not only that, you're seeing massive crypto demand. I think you saw that story with the ant miners, right? So you need these specific systems that are produced by Bitmain in order to mine for cryptocurrency. And they're out of them. They're completely out of them. They're going to be out of them until August, probably later than that. You're looking at Taiwan Semiconductor, who makes the chips for those. They're like, last time they got caught up in this trend where they were generating like $400 million just from this trend alone in 2017. So they went on this massive supply. We got to produce like crazy. And then the market crashed and they had all these orders and they're like, we're not doing that again. So this supply things, the demand supply is going to be out of balance for a while, but maybe you've seen that's the reason why you see cryptocurrencies go higher. But NVIDIA, getting back to that point, is they have the graphic cards, which is an alternative. Not as good as the ant miners, but now you're seeing that business take off. Yeah. And they're not seeing, they didn't say they're seeing that where, there's other chip companies that said the supply chain is going to hurt us. You've seen auto companies, again, they're getting thrown out as well. So, a lot of these names, yes, they're expensive, but some of them are coming down to good valuations where it makes sense to buy. And Let's talk about this really quick, Daniel, because we're looking at, everyone's like, what's the inflation? What's the hedge against inflation? And okay, we're seeing inflation rise. We'll all agree with that. We're seeing interest rates rise long term. We'll all agree with that, right? So what happens? What's the best investment for that? Isn't it remarkable how Bitcoin is at its all-time high right now? I'm pretty close to it. It's at 56,000 as I speak. Again, by the time this produces a couple hours from now, it could be 45,000 or 70,000. I don't know.
Yeah.
But right now, it's gone higher. And gold has not been that, hey, let's put money into gold. Again, interest rates go high. It's not as good as gold because people can park it there and earn an interest rate. And then people would say, well, the real interest rate is all that matters. So that accounts for inflation and it's still negative. But as that rate goes higher, gold loses the attraction of being a store of value, of keeping your money in something when you could keep it in something else. That's, believe it or not, and everyone is going to go crazy when I say this, the dollar's perfectly safe. It's not going anywhere. If it goes anywhere, you got more problems than being wrong in your investment. You probably have no house. There'll be riots in the street and the world's going to end. So it's a safe investment. It's guaranteed by the government as a printed press and keep on all the time. And the whole entire world wants dollars. Even the guys, right, in gold who sell those gold coins. Here's these gold coins. You got to give me your dollars. I want your dollars. I'll give you the gold coins because the dollar's great. It's just so funny. But I don't know, just so much going on. But it is interesting, right? With Bitcoin, it's still maintaining that strength. And it makes me think that it's going to go a lot higher.
Yeah, it's got to reach a point to where you see a lot more headlines and governments want to outlaw it. And I think that's six figures. We were talking about that a couple weeks ago. You have a lot of the biggest thing Bitcoin has versus gold is the excitement and the newness, not just because it's just over 10 years old, the newness, and you have a whole new asset class and institutions and big money. Frank, I was talking to you about, and I don't have it in front of me, I apologize, but Cointelegraph had a really cool article over the last couple of days about how purchases of $100,000 or higher for Bitcoin was near an all-time high or getting the attention of a lot of people. The sum of that was just that the recent pullback in Bitcoin, which is like 26%, people were buying it. That's encouraging. It's definitely, you have more money flowing into it, which the odds of the price going much higher are still in your favor. So that's going to take a lot of the excitement out of gold, no doubt. I'm still stubborn enough to, chip away at those, buy a little bit here, buy a little bit there, or, always look at options because I don't think gold's going anywhere. But I was surprised it went under 1,700 an ounce. So we'll see about that going forward. But, buy the best, Newmont's, Barrick, and then take some lottery picks. But hey, right now Bitcoin's working, so ride the train.
Yeah, and so I'm not so much about the royalty companies because I've seen the royalty companies in gold, and it's not a lot of royalties for them to buy, right? So they got to pay up. It was, these guys are doing fantastic because when gold was really terrible, you had the largest miners in the world were so freaking leveraged that they had to bring in cash. So they would, partner with the royalties companies with some of their best projects. Now it's, they're keeping the best projects. Their balance sheets are amazing. So the royalty companies I'm not too crazy about right now, but I will say if you're buying like, the Barracks and the Newmonts and things like that, even Equinox Gold's another one that's becoming a very big name, who was built by, you have Ross Beatty in there, but that whole thing, I was there when that whole company was created with Marica too. So he did an amazing job with that and just bringing so many different people together, David Lowe together, the late David Lowe, one of the greatest geologists in the world that ever lived. But I would stick to those. I mean, you're getting dividends on those stocks. They make money. Their production costs are below $1,000. So even if we go down to 1,600 or 1,750, and not only that, I don't think people understand copper in that aspect. Copper is at $4 a pound. It was like $2.80 a pound not long ago. So you're looking at more than $1. These guys produce hundreds of millions of pounds of copper. And this is just massive free cash flow, right? If you're producing gold, it's like natural gas with oil, right? It comes together. It's byproduct. So, that's being significantly underestimated with the copper price rising. It did pull back. I think it was like 430, 440, pull back to 4. But man, those numbers are going to be fantastic. And they're going to increase their dividend. They're going to be buying back stocks. So, if you want a safe haven to where this whole thing comes back, that's it. But if you want to get more aggressive, there's a lot of juniors that have gotten smoked, like, just really, really good buys. And I had one on, that hasn't got smoked, but just really good fundamentals, really good project, for the interview with Ed Karr. So let's move on here, Dan, and talk about, just the market, SPACs. We have another IPO coming out, which is kind of amazing. And, I'll talk more about it, which is Roblox, which, man, every parent knows Roblox, every parent, because my kids play it like crazy. And the valuation is incredible. But even that with the SPACs and the announcements coming out, I mean, I would think eventually that part of the market is going to slow because, we're talking about tens of billions of dollars in SPACs that are sitting on the market. I think there was like 100 or so, and they have to find a company, right? They have to find a company to buy. How many great companies are there that they're going to buy? And they're going to inflate the valuation tremendously. I just see this like tailing off a little bit. I don't know.
Yeah, you would hope so. I think it is because I've gotten several texts from friends and family members that have invested in some of them and then have gotten smacked. And when you look at the sheer number, man, the billions, it's something ridiculous. Like we're on pace to, we're outpace in the first quarter of 2020 to raise more money than entire 2019. I know 2020 got a big uptick too. But yeah, I mean that'll run its course. Chamath sold out of he sold $200 some million out of was it the Virgin Galactic or whatever?
Yeah, I think his
I don't know
personal
what he
investment,
put
but his
in.
company still owns it. But that's what they're doing now.
But I don't know what he put in. But I would argue it may not have been quite 200 million. So
yeah,
that's interesting.
I would say it's more probably about 20 million.
But good for him. I'm a
Yeah.
huge fan of his.
Yeah.
I like his outspokenness.
Mhm.
Yeah. So SPACs are cool. What about this? I'm not a parent, so I have no idea what you're talking about with this IPO thing.
So Roblox, and I'm waiting for it to open. I don't think it opened yet. So we're doing this around.
What are you saying? Roblox?
ROBLOX. So Roblox, yeah, it's called. And it's just, it's amazing games. I think it's like a Minecraft, but why this is special is one, there's tons and tons of games that you could develop your own game. And there's people that make $50,000 a month developing their own games on this platform that people will play, and they pay money for it. My kids pay money to get different things. They're on it all the time. They're just communicating with everybody. It's kind of like Fortnite for kids. Without the crazy, guns and stuff like that. But holy cow, I mean, they're so addicted. I had no idea this was coming public until not long ago.
So the difference maker there is I am intrigued. I mean, games are games to me.
Mhm.
Everybody likes certain things. You can create like TikTok when they do all the videos. Do you get paid on that?
No.
Okay. So.
I mean, you get paid on YouTube. Right?
Okay, but not actually. YouTube. But this, if you create this game, you could actually make money, or is that through a YouTube or
no? You could make money off of that. Then
that's the big difference maker to me. Yes. It sounds like okay.
And then they have YouTube influencers that have, I'm not kidding you, 10, 20 million subscribers. I have a few thousand on my Curzio Research YouTube page. We try to provide as much information as much, and the podcast and all this is being done, on video format, which is cool. I mean, Daniel, these guys have 10 million, 20 million. It's unbelievable. And that's what you get paid through advertising. And there's people that are making a living off of this and building a business off of it. I do think with TikTok, you get paid because there's advertising and stuff like that. People go, I'm pretty sure, you do get paid. But, YouTube's where you get paid. But this is a specific site where you can create your own games. They're coming out of a $30 billion valuation. I have to tell you something. This is a $100 billion company. This is
well. Look at you. My next question was: is this a gathering of assets, just info, or is this a profitable? You think this is actually legit business?
Oh, this is a legit company. Yeah, this is legit. Right. This is a legit company. This is like, I would put it in a class of social media, bringing people together. I don't know. I'm going to try to look right now to see how many users that they have. I mean, so they said more than 1,250 developers made at least $10,000 last year through virtual sales in their Roblox games that they built. It's coming out at $30 billion valuation. It's going to come out higher than that when it opens. Probably, if I had to say, like a $45 billion valuation. I think this is, this company's incredible. I mean, the numbers that paid developers $328 million last year, almost up 200% from 2019. Sales growth of 82% last year when it booked over 900 million total revenue. This company's generating more than Coinbase, right? And Coinbase is coming out at $80 billion, $100 billion valuation. But this is constant revenue, constant money coming in. You could say that for trading on some of the other on Coinbase. But man, this
interesting. It's direct listing today.
Yeah, I want to see how many people are actually on this. So there you go. Daily active users jumped 85% 2020. Now how many users are on it? Take a guess.
100 million.
Well, that's a big number.
No, 10 million.
No, it's 32.6 million. And the number of hours that players, this is important. This is the most important thing in social media. It's not just going there. The reason why Facebook is great is because it's not just, hey, we have 2.5 billion people on it. It's because they spend 20, 25 minutes, 30 minutes on it, right? So you're on it a lot. You're going to see more ads. The number of hours that players spent on the app more than doubled to 30.6 billion.
Jeez.
I mean, and my kids, I have to kick them off that game, and it's it's not even bad like it's Fortnite and they're killing each other and stuff. Like, it's cool because as a parent and it is COVID, you're like, you want your kids to leave you alone a little bit because they're all over you. So you're like, go play Roblox for a little bit. Next thing you know, 3 hours goes by. You're like, give me the freaking game. You're playing for too long. It's too long. But this is a legit company. This is a really good company, good fundamentals behind it, and I think it's going to go a lot higher. I mean, I don't know if I buy it immediately right on the IPO, which I hate doing, right? Because that's usually a liquidity event for people. But this is something that has a numbers, and these numbers are going to get bigger and bigger. And man, it's not just people using the platform like a social media company. It's developers able to make money off of it and build their own games. Which
that
really
is
cool.
awesome. That's interesting to me. So yeah, that'll be fun to maybe it'll work its way into a portfolio or a fun pick. So
Yeah. So I guess Dan, let's end with this. Anything that you saw this week that interests you in terms of stocks? We're always analyzing stocks all the time. I analyzed a stock in one of the probably the most boring stock you'll ever see.
Yeah.
I know it's going a lot higher, and I told everybody that, and that's Curzio Research Advisory members, my subscribers to that newsletter. You're going to get that later on today. And I made sure that by the video, because I do all video analysis and share my screens and teach you guys, try to educate you why I'm recommending something, not just giving it to you and saying, here you go, buy this stock here and goodbye. But, I kept that short than usual because it is a little bit boring. But what have you been seeing lately that you like, or any ideas you might want to share?
I'm praying for a pullback in energy with the oil. I've jokingly said how frustrated I am with not profiting or giving subscribers good picks while we've been behind the scenes kicking ourselves for the run we've missed so far in oil. I've been a fan of the Fox Corporation because you want to focus on, there's so much silliness going out, focus on great businesses with great management team. Fox Corporation is basically a giant SPAC. They have a brilliant management team. Love them or hate them. They know how to make money. They have a ton of cash on their balance sheet, no debt to worry about. They just sold a bunch of assets to Disney over the last couple of years, and they have a lot of options going forward. Their stock's getting rewarded. It's over $40 a share. And the TLT, watch interest rates. I think that's setting up for a trade, and I'm in Tepper's corner on thinking things will taper off, and we'll buy in and drink the water and Kool-Aid a little bit longer as investors.
You're gonna get shit for recommending Fox, right?
Oh yeah, it's okay. Hell, I'll get shit
I'm
about.
just letting you know, guys.
Hell, I get shit about a lot of things on this
I
podcast. That's okay.
Forwarding you all the emails, keep them coming. Of course, he's recommending Fox or whatever. It's funny.
Yeah, I just said I like it. I've been,
no,
it's
I
been
it's
right.
About the stock. I know
it's been moving up.
It's funny, but so yeah, great stuff. So Daniel, listen, thanks for joining me. I love going over the topics, things we talk about. We talk a lot in the office when we're together, and just it's nice to just bring that to video and show you guys what we're thinking, what we're seeing in the markets, and give you opinion. And it's all really cool. So thank you. Thanks, bud. Thanks so much for coming on. I appreciate it.
Absolutely. See everybody next week.
All right. So, guys, that's it for me. One last thing here. Getting a lot of interest in our Dollar Stock Club newsletter. We take a pick from our guest interviews for Wall Street Unplugged. And some of those picks do not come during the interview. Sometimes I talk before and after, which I always do. My guests, I know a lot of them, and we'll discuss different trends and ideas. And we'll throw one of those ideas. So you're almost getting a pick a week, and that's why we call it the Dollar Stock Club, right? Because it's $4 a month. But sometimes we have like influencers on, or we have different people on where they might not offer a pick. And so I would say it's about 45 picks at least a year. And we provide a buy up to price, stop loss, nice 1-2 page write up. But it's a great starter newsletter, especially we're getting lots of more young people in who are traders. I missed the energy movement. I missed it. I have a very small position in an energy company that did well. I bought low, but I have a very low exposure to that, and I missed that. But I interviewed people like Chris McIntosh, who's coming on in a couple of weeks again. Listen to him; he's been so right, telling you to buy Bitcoin for the longest time. Told you to buy the shippers for the longest time, and we made quick profits on that. And then, he's been big. Last time he was on, this is about 9 months ago. He said to buy energy. He was a tiny bit early, but man, was he right on that? So you get great ideas from a whole host of people where, sometimes you can't cover everything. You got to be right about everything, but this gives you great ideas from the greatest minds out there that I interview. And it gives you a lot of trading ideas every week. So that's $4 a month. It's again, it's $1 a pick. It ends up to be around there, but it's called Dollar Stock Club. And if you're interested in signing up, you can go to our website, curzioresearch.com. And you can cancel that anytime. You can get it for a month. You can, again, it's not, hey, we locked you in for 30 years. In order to cancel, you got to call this number, and you call it. And it's like, a robo service that makes sure that you can't cancel. No, it's not like that. Just call, cancel, it's 2 seconds, and that's it. But I'm not sure, but most people that do subscribe to Dollar Stock Club, they keep it forever because it's at a good price point. It's very cheap, and they get lots and lots of good ideas, and the performance is really good in that newsletter. So, yeah, that's it for me. Thank you so much for listening. As always, appreciate all of your support. Really mean that. It's just amazing how many people are just listening, tuning in. A lot of fun right now. Really cool. Business is growing. And I just want to say thank you so much for all your support. And I'll see you guys in 7 days. Take care.